Hi, welcome to another episode of Ying's Squawk Box. We got quite a lot of volatility in the market today, so let's take a look at the chart and see what's going on. This is a chart of S&P 500. Here I have four moving averages: 12-day, 26-day, 50-day, and 200 days. Let's start with all the way here. Here I talk about this quite often. This late December of 2018 pivot point. Let's put across here. You can use this pivot as a reference. Pretty much after that, we have this giant rally. We're making higher highs, making higher lows, held the support, come back up, break out. We're making higher highs, forming resistance. We come back down. We poke into the moving averages. We test the support again. We held it. That's your support. We come back up, break out here. Let's put a reference point, and boom, we have this long rally all the way from October. Today, we got quite a volatility here coming into the market. As you can see, the volume start to pick up. We got 74 million shares traded for S&P 500 futures versus the usual average of 20-day volume, which is at 64. So something like that is definitely worth our attention, especially if you look closer. You can see this giant tail poking into the moving average, tested the 12-day moving average, bounced back up. From my experience, I think this is probably going to be a day one of the correction. If it's a small correction, we're probably going to see something like this or something like this. Potentially, we're talking about a week-long or 2-week-long correction. And I'm expecting the price to test 12-day moving average here at about 334. And eventually, we're probably going to test 26-day moving average just above 330. So these two price levels are going to be what I'm paying attention to. And hopefully, it won't go down there. But in any case that it goes down there, then we're potentially looking at this pivot, which is 320. Something like that is quite interesting. Now, why do I say this is going to be a correction? Let's look at this. This second time series plot is called RSI, which is short for Relative Strength Index. Let's zoom in and let's check this out. If you zoom out and you see this is a standardized time series chart. And the reason why this is interesting is because the distribution of RSI, if you work out the math, it actually follows a standard normal distribution. What that means is this 20 and 80 cutoff, it's actually 95 confidence interval, which means we're 95% confident that most of the observation of this index falls in this range, 20 and 80. Something like that is interesting. Why? Because confidence intervals allows us to draw cutoffs, and these cutoffs helps us to test the hypothesis. The hypothesis is if the stock comes back down here, how long will it stay down there? And that's something quite interesting, and that helps us to time the market. So let's take a look. All these tails are quite important for me. You want to be as close as you possibly can. So let's start with October. Let's put a cross, and that's going to be November and December. So about 2 to 3 months. Let's put another cross. That's how much the bottom lasts. It doesn't last longer than that. After 3 months, it bounced back up. Same here. Let's do a cross here. June, July, August. That's another 3 months. And that's pretty much how long this bottom lasted. And my expectation is here, if you put a cross, January, February, March, I'm expecting the bottom to come in here, actually somewhere in March and in April. Exactly what do I mean by that? I'm expecting the relative strength index to wiggle around somewhere in here and eventually come back down to form a tail. Now, exactly how deep that tail goes, I have no idea. But timing wise, I think it's probably going to happen in March or April. Something like that is quite interesting. Now, let's go back to the price. If you look at the price chart, you can get rid of all the drawings. We can start fresh. We can put our focus somewhere in March or April, somewhere here. What are some big levels that I'll be watching at for this time period? The first one I will be watching is this. This 306 is going to be a big level. If it breaks, we're probably going to see lower lows and lower highs to the downside. And then immediately, I want to see if this 200-day moving average is held. So anywhere above 300, I would expect alpha buyers to come into the market to grab some shares. It probably won't be a heavy buy, but I would expect some buyers to come in. If the market forms a tail poking into this 300 price level, I would expect buyer to come in. And then the next level I'll be looking at is this pivot point. Let's put a cross, let's put a horizontal line, and that's going to be 285. So if we're talking about bigger levels, these are the levels that I want to look at. Now, we also want to have a macro point of view. What do I mean by that? Let's remove all the drawings and let's go to weekly chart. So we talk about this rally. Let's put across. We have higher high, higher low, higher high, higher low, and bam, we have this bullish run all the way from December 2018 to today. If we use that as a cross, if we use that as a reference point, let's put a cross. Then this is going to be an entire bull run that we're interested in. So let's put the information line from here all the way to here. Look at that. That's about 40% gain. That gain does not happen very often in the market, and there's no saying that this will last forever. Chances are this will eventually slow down and stop, and we're gonna have to see how the market pivot from there. So all these information are right there on the chart that I think it's worth our attention. If you look at the macro point of view, then I would say this 50-day moving average on the weekly chart is definitely going to be a big level that we're watching at. So it's going to be this 300 level. It's also interesting because it's actually the resistance somewhere here in the fall of 2019. It's where we broke up to the highs, and after that, we're having an entire 3 months of bullish run. So definitely this 300 is going to be what I'm looking at on the macro point of view, and then let's see how it goes. So I hope you enjoyed today's market analysis. If you want, you can apply the same analysis on power shares, QQQ. And these reference points share similar philosophy as the market. And if you want to dig deeper, you can look at Apple, you can look at Google, and we have Microsoft, Facebook, companies like that. And all of these pieces form together will get an idea how to solve the big puzzle out there. Thank you for watching. I hope you enjoyed today's episode. If you want to support the channel, give it a like and click that subscribe button, and I'll see you in the next episode.